Good morning, everyone. I hope you all are having a wonderful and restful Saturday so far. I am CS Harsiroya, and on behalf of Excellence Advisory, I will warmly welcome you all in. I am delighted to have you all here as we dive into one of the hot and emerging topics, that is SME IPOs insight from regulators, merchant bankers, and advisors. So the few reason why SME IPO is hot and emerging topic nowadays is because of strong MSME growth story, investor appetite for high growth business, simplified SME IPO platform, recent strong listing, regulatory push and reforms, alternate to debt and PE funding. So we are joined here by an esteemed panel of professionals who brings wealth of experience in SME IPO. Before I introduce you to the panelists, let's just know a little about Affluence Advisory. So Affluence Advisory is an ISO 9001 certified firm, is a multidisciplinary firm established with a vision to provide one-step solution to client under the dynamic and complex business environment. The Affluence Advisory team which includes chartered accountant, company secretaries, corporate lawyers, management graduate, and any other seasoned professional which are committed to deliver quality services and assistance to its client for more than 2 decades. So let's just go ahead with the introduction of panelists now. We are joined today by an esteemed panel of professionals. To begin with, we have Mr. Ritesh Shah. Mr. Ritesh Shah is a Deputy Vice President at BSC. He is a capital market specialist with an experience of more than 2 decades. He is assisting small and mid-sized corporate and startup in raising funds. He has worked with numerous bankers. He has worked over on a varied transaction across sectors. He has experience of assisting companies throughout life cycle and providing an app solution for their growth, which includes seed funding to maturity stage funding. He has dived numerous corporates and raised capital for them through various routes. He is passionate about growing SMEs and helping promoters realize their dreams. In the current role at DSC, he is promoting DSC SMEs and startup platform with aspiring entrepreneurs who want to bring tectonic shift in their business and to be torchbearer of Indian economy. He will be sharing deep domain with companies and advise them on measures to raise funding. His strengths lies in evaluating the right opportunity for companies and advise them on raising optimal capital. We are absolutely delighted and we welcome you, sir.
Thank you very much. And very good morning, everyone.
Good morning.
Yeah. So moving forward to our next panelist, we have Mr. Pasha. Mr. Pasha is the founder and director of Smart Horizon Capital Advisor Private Limited, a SEBI-registered Category 1 merchant banker since 2020. Under leadership, the firm has quickly positioned itself as a trusted player in Indian capital markets, specializing in providing strategic advisory services to its client in SME segment. With over 15 years of in-depth experience in Indian capital market, Mr. Pasha has developed a strong track record of success, particularly in merchant banking domain. He is a pivotal in establishment of merchant banking division at Trainee Shares Limited, where he worked closely with prominent industry leaders, further honing his experience in capital raising and financial advisory. He is a true visionary and most hardworking person in the entire industry. He is an entrepreneur by choice and always found like-minded person to list in the capital markets. Mr. Parsha has been instrumental in guiding more than 100 companies through the process of going public on SME capital markets. His hands-on experience, approach, and strategic mentorship have been integral to the successful listing and growth. Mr. Pasha holds an MBA degree from DSC Institute Limited and a Bachelor of Management Studies degree from Mumbai University, where he was a university topper. We are absolutely delighted and we welcome you, sir.
Thank you so much.
Yeah, moving forward to our next panelist, we have an HNI investor, Mr. Dhiren Sethia. With over 2 decades of rich experience in the dynamic world of stock market and investment, Mr. Dhiren Sethia brings a deep industry insight and strategic foresight. His partnership with a reputed investment banking has been instrumental in nurturing the growth of SME and driving successful fundraising initiative. Mr. Dhiren also spent more than 10 years at KDA Strategic Advisor Fund, where he cultivated strong relationship with company management teams, further enhancing his network and understanding of corporate strategy. We are absolutely delighted and we welcome you, sir.
Thank you, Harsh.
And lastly, we have in our in-house panelist CS Bhavesh Chheda. Mr. Bhavesh Chheda is a practicing company secretary who heads the compliance vertical at Affluence Advisory Private Limited. With over a decade of experience, Mr. Bhavesh brings extensive expertise in wide range of area, which include SME and main board IPOs, preferential issue, QIPs, ESOPs, listing compliances, capital restructuring for listed companies, and merger and amalgam acquisition. His in-depth knowledge and hands-on experience make him valuable voice in navigating today's complex regulatory landscape. We look forward for his insight during today's session on SME IPO. We welcome you, sir.
Thank you, Harsh.
Yeah, so about the flow of this webinar, we will be covering many key points, which will include why SME IPO is hot nowadays, what is SME IPOs, what are the key features, what is the overview of SME IPO market, why SME IPO was introduced, what were the challenges for MSMEs, how SME IPOs help, etc. It includes eligibility criteria for SME IPOs, how merchant bankers arrive at right valuation, highlights of recent regulatory changes, role of merchant bankers, the role of chartered accountant and company secretaries in listing of SME IPOs, benefits of SME IPO to MSME business, investor expectation from SME IPOs. So we will be discussing few case studies on successful SME IPOs and rejected SME IPOs as well. So I will now request Bhavesh sir to kindly take over.
Thank you, Harsh. Thank you, everyone, and good morning to everyone. I'd like to highlight few topics with that why SME IPO is hot nowadays. What is SME IPO? Why it was introduced? What is the market overview nowadays? And many other topics we'll be covering today. So small and medium enterprise, that is SME, are the backbone of India's economy and driving innovation, job creation, economic growth. The sector consisting around more than 36 million unit as of today and provides employment over 80 million persons. The sector throughout have more than 6,000 products contribution and more than 30% GDP, besides 45% of the total manufacturing output and around 40% of the total export of the country. However, this business often faces the challenges with respect to the accessing the capital or funds for their growth potential. To address this issue, the Indian capital market has introduced a new avenue, that is SME IPO. By listing their shares on the stock exchange, SME can directly tap the public market to raise the capital. This not only provides much needed boost to their financial resource, but also offers a host of other benefits as well. In this webinar, we will also cover the challenges faced by the MSMEs and how SME IPO helps to the MSME. So first, let us understand what is SME IPO. SME IPO is an initial public offer that allows the small and medium-sized enterprise to raise the capital by issuing shares to the public. This provides the business with much needed source of funding, enabling them to expand their operations, invest in research and development, and compete more effectively in the global market as well. The key features of SME IPO is say it require the threshold and the investment requirement is very low as compared to the main board IPO. Then it gets listed on a separate and dedicated SME platform. There is a restriction with respect to the small trading, like minimum size starts from around 1 lakh or more than 1 lakh rupees. So, penny investors or penny stocks will not be there. Access to the MSME business gets access to the capital. There would be liquidity to the investors. The capital requirement and network requirement is also very low for listing on SME IPO. Then profitability and track record requirement with respect to the listing is also there, and the criteria is low as compared to the main board IPO. And there is a post-issue shareholding restriction as well. Now let us understand how SME IPO is different from the main board IPO. So SME IPO gets listed on a small and medium scale exchange, and it is suitable for small and medium scale companies, whereas main board IPOs are mainly suitable for the companies which are large scale companies. Then what is the minimum post-issue paid-up capital requirement? So minimum post-issue paid-up capital requirement is 1 crore for SME IPO, and maximum it can go up to 25 crore. Whereas for main board IPO, minimum requirement is 10 crore and above. The profitability requirement with respect to SME IPO is that the company must have profitable EBITDA for 2 out of the 3 years. And for main board IPO, even the loss-making companies can list on the main board IPO subject to there are certain other criteria and conditions. In SME IPO, 100% underwriting is mandatory and merchant banker also has to underwrite the minimum 15%. Whereas in the main board IPO, underwriting is not mandatory. Apart from that, in SME IPO, market making is compulsory, whereas in main board IPO, market making is not compulsory. Then, with respect to the anchor SME IPO, whereas in the main board, the anchor investors include institutional investor and they have to invest at least 10 crore in the main board IPO. Apart from that, with respect to the approval process, so DRHP, RHP, etc. is approved by the stock exchange in respect of SME IPO, whereas in case of main board IPO, it is also approved by the SEBI. Then investors eligibility mostly retail and HNI investors invest in SME IPO, whereas in the main board IPO, wide participation is through institutional investors, retail investors, and HNI. Then apart from with respect to the preparation of SME IPO and due diligence, the in SME IPO due diligence is focused and streamlined, whereas in the main board IPO due diligence process is very comprehensive. Then while applying for the main SME IPO and main board IPO, minimum application size is 2 lakh and above nowadays. And for main board IPO, it is say around 15,000 rupees. Now, with respect to the minimum number of investors, in SME IPO, minimum number of investors required are 200, whereas for main board IPO, minimum number of investors required are more than 1,000. The timeline to get the company listed on SME platform is around 3 to 6 months it takes, depending upon the organization structure and the process. And timeline required for the listing on main board IPO is usually 6 to 12 months. Then coming after compliance after listing. So SME IPO companies are required to comply with the listing regulation, but there are certain relaxation. Whereas on the main board companies, the compliance regulations are stringent. Now let's move forward with respect to the SME IPO market overview. The Indian IPO market in 2024 has experienced significant growth, particularly in the SME segment. The market is at a milestone year for both listing and fundraise. India tapped the global charts in 2024 with 326 new listing collectively in SME as well as main board. The year 2024 witnessed a remarkable surge in the SME IPO with more than 243 companies listed on SME platforms, both BSE as well as NSE. And it was as compared to 2023, in 2023 there were 179 company listed, whereas in 2024 we have seen 243 companies getting listed. It reflects around more than 35% year-on-year growth as compared to the SME IPO listing. The total fund raised via SME IPO crossed a significant milestone of more than 9,000 crores were raised by SME IPO. The below tables will give you the month-wise chart and the city-wise how many companies got listed in which cities and which months. Apart from that, we are also cover the certain case studies are there with respect to the successful SME IPOs. So the company one which was listed listed in March 2024, the company was in the metal and mineral processing. The IPO price was 87 rupees. However, on a listing date, it opened at 250 rupees, which was more than 150% premium. And post listing also it saw huge growth, huge rally in the price, and it price grown more than 1000% in 2024 itself. And what were the reason that this IPO good so successful? That reason for success of the IPO was strong growth, good fundamentals were there. Then company had expanded its business in the manufacturing, boosting the capacity and demand. Apart from that, there were a good profitability metrics in the company. There was a high return on equity and capital employed. Apart from that, investor sentiment and market conditions were also good at that point of time for the SME IPO. Apart from that, another company which was in the business of food processing, that company also seen the huge oversubscription, around say more than 1800 times it was oversubscribed. And even the retail segment was oversubscribed by more than 2300 times. And the reason for the success of this IPO was that the issue size of the company was very small, and it attracted the retail investor for the purpose of say listing. And then apart from that, the sector or a market hunger with respect to the SME was good at that point of time, and that is why the company got good amount of response. Then apart from that, another company which was listed on NSE Emerge platform, IPO size was around 93 crore. It was oversubscribed by 231 times and listed at 26% premium. The reason behind the success of this IPO was they have a clear use of the proceeds, that where they will be using the proceeds which are going to be raised by the IPO. Then apart from that, they were having a regional presence, good regional presence over there in the area where the office, factory or office was located. Apart from that, the company was in the IT space, and nowadays IT space is already getting a good response. Now let us understand why SME IPO was introduced, what were the challenges MSME were facing, and how SME IPO helped to overcome these challenges. The SME IPO was introduced in India to solve the specific problem. The MSME needed easier access to the capital market, but the main board IPO framework was too heavy, too costly, and complex for MSME industries. And that's why only the large scale companies were getting listed on main board IPO. However, the MSMEs were facing the issues with respect to capital market tapping, fundraise, etc. Now let us understand the reason for introduction of SME IPO. So SME IPO was introduced to get easier access to the capital for MSME. Then one of the reasons of bringing the SME IPO was that it will have a simplified and cost-effective process for SMEs to get listed. It will also provide investor protection and growth opportunity to MSMEs. It will also encourage the entrepreneurship and formalization of their business for MSMEs. And also government regulations were there to support the MSMEs and SME businesses. And that is the reason that SME IPO was introduced. What were the challenges MSME faces which lead to introduction of SME IPO? The challenges with respect to the SME IPO was earlier that there was very low awareness with respect to IPO readiness in the MSMEs, and it was leading to hardly any companies were getting listed on SME platform. Earlier, the companies were not, means MSME promoters were not knowing about the listing process, regulatory requirement, cost of listing, ongoing compliance obligation, etc. Apart from that, another challenge is financial and regulatory issues. So MSMEs were facing huge problem with respect to the fundraise or financial problems. They were only getting around say 15 to 16% companies were getting finance on time, and that too from the bank loans and etc. This forced them to rely on their either own resource, or either it will affect their own growth. And even the large firms, large MSME firms were getting struggle to get the credit on a cheaper rate from the banks. MSME faced this challenge apart with respect to the tax as well. Tax burden was there, and labor law challenges were there, which proved costly to them. Despite of the attempts to make sector more competitive, compliance with regulation and tax registration remains difficult, which leads to the low capital and business closures. Many business gets closed by person to because of these reasons, that low funding they were getting. There was a huge compliance requirement, but tax burden was there, etc. And they were not getting opportunity to expand their business. Apart from that, high cost of borrowing, the MSME which were getting the loans from the banks were providing either the loan at a higher rate, or they were asking for large amount of collateral securities, etc. There was a lack of equity funding options. Unlike large companies, MSME were hardly getting any attraction from the professional or institutional investors. That was also one of the reason that SME IPO was introduced. Then MSME business were facing were not having strong corporate governance, not strong financial reporting, and having lack of transparency was there. Apart from that, MSME business were facing scaling challenges. Means they were not having enough working capital for their expansion. They were facing the struggle with respect to research and development and spending the money on technology enhancement. Then facing the issue with respect to skill manpower employment. Then lack of innovation. They were outdated technology and limited branding and growth outreach. Apart from that, most of the MSME business are owner-driven structures. Means most of the MSME business are run by the family offices or family business. Now, how MSME business helps? So, SME IPO helps. So, SME IPO helps the MSMEs to get access to the equity capital. Like SME IPO provides direct access to the capital market. Companies raise the funds without depending on the banks or collateral. It enables the long-term growth-oriented funding, not just debt. Then apart from that, it also improves the credibility and visibility. Means once the company gets listed on a SME platform, the brand recognition enhances, and it also enhances the trust among the investors, customers, suppliers, lenders, creditors, everyone. Apart from that, once the company is in the process of getting listed on SME platform, their corporate governance enhances, and post listing also the corporate governance enhance and the transparency increase. Apart from that, the investors and the promoters get liquidity by getting the shares listed on SME platform. Like promoters can partially offload their stakes while listing on SME platform. It also provide an exit opportunity for the angel investors or a VC. Apart from that, another benefits could be that SME IPO provides a valuation to the companies, that companies can derive their value from the market itself. Then SME IPO also helps to attract the talent and to retain the talent. SME IPO helps, can issue the ESOPs to their employee to attract and retain the talent. And it is also the pathway for getting the company listed on the main board once the company meets that certain criteria with respect to the main board listing. And the criteria could be profitability, market capitalization, compliance, net worth requirement, and it will give the wider access and wide of the investors and all. Now I request Parth sir to let us know about the eligibility criteria of SME IPO and highlight the recent regulatory changes with respect to the SME IPO. Parth sir, over to you.
Okay, first of all, thanks a lot for inviting me. I think I'm loud and clear. So first of all, I think we have crossed more than 80 participants. So I think that's an achievement for the entire Affluence team, and kudos to them. It's Saturday morning, and everybody must be in the weekend mood, but still, I think they did a great job. So basic eligibility criteria I would come to for any SME, the paid up capital should not be more than 25 crores. So that is the first regulatory thing. Second, track record. Company or promoter should have a track record of at least 3 years. For converted entities, earlier operational track record could be included, but there should be one full financial year that should have been completed before any partnership or LLP could have been listed. If there is a conversion and a promoter change, then at least one full financial year before IPO filing. If the promoters have changed in last 1 year, then only 1 year cooling period is applicable. After that, only they can apply for the DRHP. Let's come to financials. They should have a minimum operating profit of 1 crore for 2 out of 3 financial years. Both the exchanges have their separate criteria. So let's start with BSE. Net worth should be more than 1 crore in last 2 financial year. Track record of 3 years. EBITDA positive in last 2 out of 3 years. Debt equity ratio maximum 3:1. Promoter contribution as per ICDR, and no default in IBC and other hygiene factors. Website is mandatory for both the exchanges. And if we come to NSE, the track record of three stays as it is, and there should be free cash flow from equity should be positive for 2 out of 3 years. So that's an additional criteria that is there as far as NSE is concerned. Now let's come to the recent regulatory highlights that have changed. So now what has happened is in the recent, I think the circular came on 8th of March, if I'm not mistaken. They have changed the criterias in some of the ways. I'll just scroll you through the those ideas. So first is eligibility norms. So minimum EBITDA of 1 crore for 2 out of 3 years. If there is a change in promoter, then a cooling off period of 1 year. Earlier, general corporate GCP was capped at 25%. Now it is 10 crore or 15% of IPO size, whichever is lower. IPO funds cannot be used to repay the promoter or related party loans. Promoter lock-in. So earlier, 3 years was a promoter lock-in for 20%. That remains unchanged. The excess holding that they had. So 50% is now applicable for 2 years, and now another 50% is for 1 year. So that this is another change. Now, as far as fund monitoring is concerned, so credit rating is required. Sorry, not credit rating. Monitoring is required for more than 50 crores IPO, and certification as per for the fund used in quarterly results. And if working capital uses more than 5 crores, then also auditor certification is required. Uh, Disclosure norms. So now what has happened is the site visit is compulsory, and the offer document will be open for public for more than 21 days. So at that point of time, anybody who has to say anything about the offer document can see that, and public notice has become mandatory. Little change in pricing and allocation norms as well. Earlier also it was now you have to publish 2 days before the issue opens the floor and price band. And minimum application has been changed from 1 lakh to more than 2 lakhs. So this is a little this is a major change. And the NII allocation, so non-institutional category allocation, has been similar to the main board. So 1/3 is between 2 lakhs to 10 lakhs, and 2/3 of the NII will be blocked for more than 10 lakhs. Minimum allottees has been increased from 50 to 200. So these are some of the major changes in the recent regulatory. I think this should help. I think we can move on to the next question. You're not audible, if I'm not mistaken.
Bhavesh, you're not audible.
Parth sir, may I know what is the core team required for preparation and handling of SME IPO?
So first of all, you need a merchant banker registered with SEBI. So I must urge all the entrepreneurs who are planning to get listed should go to the SEBI's website and search the merchant banker. So I think that will give a lot of credibility and insight. Plus, the data is readily available for their track record. Second is company secretary, statutory auditor, and peer-reviewed chartered accountant, registrar and transfer agents, depository participants, the legal counsel, banker to the issue, advertising, and internal team. The internal team is very important within the company. So, example, you're bringing the IPO, you should have your middle management ready. So basically, we call it middle management instead of senior management. So middle management plays a very important role. So promoters, so if you are planning to list your company, it shouldn't happen that it is a 1% company and promoter is handling everything. This wouldn't help in getting the right valuations. So if the company works like an institution, it follows the working of an institution. This is first important. Second is financial team. So example, the team that who is going to collect and provide the data to the merchant banker. So there are a lot of queries, there are a lot of documentation paper involved. and a compliance team. So basically, you need one person who will comply, who means basically a company secretary will ensure that your all regulatory filings are done. Plus, a person who will coordinate will be one point of contact for the company and who can ensure that the offer document is filed.
Okay, so my question to Mr. Parth sir is, what is the role of merchant banker in SME IPOs?
So merchant bankers play a very crucial role. So trust me, it's like a marriage when an entrepreneur plans to list their company. So they play a very important role and have a role in post-listing phase as well. The responsibilities are higher in addition to the conventional role of just managing and underwriting the IPO. They are responsible for ensuring the market making period for 3 years for the entire IPO. Lead manager acts as a coordinating person. So basically, anybody plans to who wishes to get listed, lead manager will ensure that they will speak to each and every agency involved, coordinate the entire process from start till end. So example, preparing the company for offer document, conducting due diligence, managing regulatory approvals, getting the right set of investors, promoting the IPO through marketing and roadshows, ensuring the IPO valuation and pricing, providing mandatory market making. So these are some of the points. Plus pre-IPO planning means like see whether the company first of all requires an IPO. So the first question is, do you need an IPO? Second is due diligence and document. If the company really needs an IPO, then due diligence and documentation. Then regulatory filings and approvals, marketing and investor reach, IPO execution, and post-listing support. So first of all, the company should always think when to get an IPO. So when to get an IPO is a very important question. It's not just about that everybody is bringing the IPO, so we should also plan. No, the company should ask themselves that whether I need this funds for my growth capital or not, whether I can multiply the growth numbers in next 3 years or not, or next 5 years or next 10 years. If you are in a stagnant phase and you're bringing an IPO, you're not doing justice to anybody. But if you think that you're on the verge of growth and bringing an IPO, then probably you will do the right justice.
Yeah, thank you, Parth sir. My next question is to Mr. Bhavesh sir. What is the role of company secretary and chartered accountant in SME IPO preparation?
So CA and CS plays very important role, whether it is a in-house CA CS team or whether it is a advisors or a consultant, say, or including statutory auditor, secretarial auditor. So CACS plays important role with respect to the corporate structuring and the compliances. Apart from that, CA plays a very important role with respect to the financial preparation, audit, restatement of accounts. Then combining role of CA, CS, lawyers comes with respect to the due diligence support like secretarial due diligence, financial due diligence, legal due diligence. Apart from that, all of these people play important role with respect to documentation, then drafting of resolutions or any other documents. Then apart from that, they also provide the documentation to the cross teams, like say for example merchant banker is required certain documents information, so they provide the set of information and document. They coordinate with the RTA depositories, getting the ISIN, etc., then converting the promoter stake into demat. Then they also provide the post IPO compliance support with respect to the regular compliances and all these things. So this is the, I think, major role of CA and CS with respect to the SME IPO preparation. Now I would like to ask Ridesh sir that what is the role of the stock exchange and SEBI with respect to the SME IPO?
Right. Thank you, Bhavesh, and a very good morning to everyone. It gives us immense pleasure and a lot of joy and excitement to see, such a wonderful audience. I mean, it's a gathering of over 80 participants. And as Parth said, that Saturday morning, weekend on a morning, everyone has come and, given or invested their time for this session. It means a lot to all of us as panelists, as well as it means a lot to you, because it makes a statement that you all are willing to go ahead and raise funds, get public to the market, public to market investors to your company and have them as partners. So this is a first step that you're taking in your growth journey. Right. So coming to role of stock exchange and SEBI. So we BSE started its journey as in 150 years back. BSE is a 150 old institution, but when it comes to the SME platform, it is still very in a nascent younger days. The platform is just some 12 13 years old. We started, to be precise, on 13th March 2012, and so it's just over a decade old. And why this platform was set, was the fundamental reason is that a lot of larger organizations were coming doing the IPO, but there was a need felt for having a separate niche platform, a different or specialized platform, or we can say a niche platform for SMEs who can get themselves listed on a particular platform. And for investors as well, it helps them to understand what kind of investments they are getting into, what kind of risk profile that they have, what kind of companies. So this are everything is segregated, everything is synchronized, and markets can have a better view of this SMEs, as well as SMEs can have a particular platform when they can showcase their strengths and they can raise funds. Now, what role does SEBI play and what role does a stock exchange play? SEBI is a market regulator. They are the capital market regulators. So they are the watchdogs and they are the policy makers. When it comes to BSE, we are level down. So we are first level regulators. We enforce whatever SEBI has set in the policies that SEBI has set. We ensure that the policies are being, followed by all the set of participants. So there are different stakeholders when we talk of SME IPOs. There are different stakeholders. So we are basically BSE plays as a conduit between SEBI as well as the merchant banker and the company. So what SEBI does is SEBI has already formed ICDR regulation. It has set the framework. It has set the steps and the procedures to be followed, the compliances to be made, the conditions that they have set, the conditions that have to be put in place. Now, what BSE does? So BSE plays a role when it enforces whatever policy framework that SEBI has set. So let us look at certain criteria, like say the DRHP or the RHP. Now SEBI has set the ICDR regulations when the framework is already given under the Schedule 6. There is a framework that the ICDR has to be made in a particular order. Now, what BSE does is BSE ensures that the entire offer document is in a particular order, disclosing all the information, is compliant with the ICDR regulations. Number one. Number two, BSE ensures that all the disclosures that are made in the offer document are complete, holistic, and ensure that there's no non-compliance found in the company that is coming for an IPO. Once BSE assesses everything, once BSE is comfortable with all the all the disclosures, basis that it will issue an in principle approval. Now, this is one thing that BSE does at a very high level. Now, when we go to let's take a step down. So SEBI has set in the eligibility criteria. So what BSE does is BSE will check the eligibility criteria. There are certain eligibility criteria which ICDR mentions, and there are some set, as Parth has earlier mentioned in his when he spoke in his speech, that there are different criteria for both the exchanges. Well, we have certain criteria which are exclusively followed by us, like, for example, the debt equity ratio or the net worth criteria. So we ensure that all those eligibility criteria are met by the company while doing an IPO. The next thing is the IPO process overview. So SEBI says that this is a process that you have to follow, but we ensure that the process is followed to the T. That there are no, there are no no steps that are missed out. So, for example, the company files the offer document. The offer document is hosted on our website for public comments, for public review, public view. We go through the offer document, we verify everything, and then we issue the in principle approval. Post which, the company files an updated offer document with us, and we give them a go ahead. Post which the issue is open to the public for subscription. And once the issue is over, then again SEBI has set certain criteria that you cannot, where the funds have to be utilized, where the company can invest, or how the company can utilize those funds, the objects, etc. Now BSE will ensure that it will ensure that the objects that are mentioned in the offer document are being utilized in the right manner or not. So they will ensure whatever has been stated in the offer document, BSE will ensure that the compliances or the monitoring will happen in the direction that the offer document mentions. Even the corporate governance measures that are there, the corporate governance standards that are set up, we will ensure that we look at it, we see if the corporate governance standards are being followed. Post listing, whether the company is making regular filings with the exchanges about the financials, the shareholding pattern. So we ensure everything. And also, in the IPO there are monitoring agencies, which for a particular size of IPO there is a monitoring agency. So we ask for reports from the company that the monitoring of the funds is happening in a proper manner or not. And lastly, if there are certain non-compliances, so exchange, as an exchange, we can halt or we can delay an IPO. We can ask the company to delay an IPO until unless we don't satisfy ourselves. Whereas when it comes to SEBI can definitely go ahead and cancel the IPO or cancel the approval. They can penalize the promoters. They can take action against the merchant banker. Uh, they can take action. So as SEBI is again, just to summarize it, SEBI is a watchdog. It's a capital market regulator. So they have the powers to set the policy. We as a first line regulator, we ensure that all the compliances, all the policies that are set in place, that are being followed. We enforce that everything is done in a right manner, and we report to SEBI that yes, everything that is happening in a proper methodical manner. I hope that answers the role that we and SEBI plays.
Yes, sir. Nicely answered the question. Another question is how SME IPO helps in raising the fund as compared to the private equity. Because nowadays we have seen that many companies or many SME companies raise the capital through private equity as well. So wanted to understand that how SME IPO is more beneficial as compared to private equity.
See, I'll put it so private equity. Okay, let me put it this way. These are two different instruments basically. So both have different challenges, or both have different different perspectives. Firstly, a private equity investment. So let's understand this: the success rate in a private equity deal, where as compared to a SME IPO, is very less. Why I say that is because in a private equity deal, let's understand there are a lot of investors, who VCs or SEBI registered AIFs, who are basically private equity investors, who get a lot of those deals on a day to day basis, and out of, let's say, the probability of a deal going through is very less. Whereas when we look at the SME IPO, the probability of a deal happening is much higher, because there are certain aspects like, say, the valuation. So valuation in a pre kind of a deal has to be very, very, very lucrative for an investor to come in. So he comes at a at a far lesser valuation than what the peers are being quoted in the market. Whereas in case of a SME IPO, the valuations or the fundraise is all dependent upon the market conditions. So if the markets are good, the valuation of the peers are good, you can the merchant banker and the company can value the instrument accordingly. Now, as far as control is concerned, ownership is concerned, dilution is concerned, in a PE kind of a deal, you can have a substantial minority dilution. It can be anywhere from a few single digit percentages to a double digit, like say 10%, 20%. But in a SME IPO, you know you need to dilute over 25%. That's a minimum public shareholding criteria of SEBI. So 25% and 5% of the public offering. That makes it 26.25 minimum. So you can go up to 30. You can go higher as well. But generally, 26.25 to 30% is the range. That's the range of dilution. It's it's a ballpark number that I'm giving. Depends from company to company. But yeah, 26.25 to 32% is the dilution that happens in a SME IPO. However, the involvement from an involvement perspective, a PE investor, he automatically becomes a partner of the company. So he would want to know what exactly is happening on the company. They are virtually on a day-to-day basis, operating, working along with you, and they are checking your books on a regular basis. Whereas in a SME IPO, once you get listed on the capital markets, though your investors are your partners, but your regulatory filings are, periodical. That is 6 months of filing. That too, it's very light on regulation. When you have to file the financials as well as the shareholding pattern on a 6 months basis. But when it comes to a private equity investor, there are a whole host of filings and records and MISs that you have to keep and share with them. Governance and reporting both go hand in hand. Reporting is more in case of P when it is compared to SME IPO, but governance more or less goes hand in hand in both the cases. When it comes to PE, it's a very small world kind of a thing. Will know about what deal have you done. But when it comes to an SME IPO, you get good visibility, you get a branding, because once you get listed, it's the whole investor community, not only India but globally as well. Everyone knows that yes, there's a company listed, and your financials, your information is made available. It's on the internet, so it's in the public domain. And any of your global vendor who wants to know about you, or anyone who is looking at an Indian entity who is in a particular in the business that you are in, they will be easily able to search or do a research on your company. So this helps for your branding and your visibility. And the cost of capital, PE funding, the cost of raising funds might be lower at the initial phase, but then the exit, the PE funds might want a certain benchmark. Whereas in IPO kind of a thing, the costing, there are a lot of entities involved. As far as BSE is concerned, the costing, the processing fees are very minimal. And then post listing, you have the annual listing fees. Again, they're very minimal. So that's available. Everything is there in the public domain. But however, there are other entities. So the overall costing, maybe higher at the in comparison to PE. I'm not saying it's high, but in comparison to PE, comparative analysis, it could be higher. However, having said that, there are no return expectations from the investors, or you don't have to guarantee any returns to the investors who are participating in the IPO. And more importantly, see, as a from a PE perspective, it might create a value to you. You might get a valuation, but that valuation is illiquid. So you, even if you're doing ESOPs for talent retention, the value of the equity shares or the ESOPs is not. It might just be on paper. It is not liquid. That's why the value might not be there in the hands of the holder. But in case of SME IPO, the first and foremost, the day that you get listed, the value is created for the entrepreneur. his shares has a value, so that's why his wealth is wealth creation happens. As well as there's talent retention. In the case of talent retention, ESOPs are given, the ESOPs are also valued, so it gives a lot of motivation to the employees to be with the company for longer term. Yeah.
Okay, thank you, Ritesh sir. My next question is, what are the key documents required for SME IPOs?
So the first and foremost, the most important document is a DRHP, RHP, and prospectus. So that's the most important document. However, apart from that, we need a lot of other documents like the due diligence certificate, the legal due diligence, and in the offer document there are sections like restated financials, the peer reviews, auditors, examination report, the objects of the issue, the promoter's contribution. The if there's a chartered engineer, so the verification and the corporate governance, etc. So, I mean, anything, right? Starting from your incorporation documents, say your MOA, AOA, to your tripartite agreement with the, because all the shares that are in the company have to be held in dematerialized format. So you'll need a tripartite agreement with both the depositories. So right from incorporation till the date that you come and get you file the offer document with us, all the information that is contained in the offer document has to be backed up with all the relevant certificates or documents.
Okay, thank you, sir. Just as you mentioned that DRHP and RHP are the key documents, so just wanted to understand what is the importance of DRHP and RHP and prospectus for while doing SME IPOs.
So we are in a disclosure based regime. So what it means is that anything and everything concerning a company has to be disclosed. So any investor who wants to invest in the company needs to know about each and every detail about the company, right from the incorporation till date what has happened, and it gives different, it covers different aspects or different sections. So right from, say, you have the issue information, what is the deal structure like, what is the offering that the company is going to make, whether it's a fresh offering. I mean, of course it has to be a fresh offering because there's a criteria that laid down by SEBI. 80% has to be fresh offering, and 20% can be OFS. But so what's the deal structure? Then the risk factors, what are the risks associated with the business of the company or the industry? The business itself, what is the business model of the company, how the business is operated, the entire process, the production flow, the organizational structure, what are the strengths and weaknesses of the company, what are the strategies of the company going forward, how is the supplier infrastructure, the raw material, everything that's concerning the business. The industry section, how the industry, what are the prospects of the industry. Then you have different sections like the litigations. If there are litigations against the company, so you have to cover in the litigation section. If there are the certificate, all the certificates and the regulations applicable to the company have to be covered in the litigations section. Then the most important chapter is the objects of the issue. So why are we coming to the market, and what is the purpose of for us to come to the market? To raise funds, and for what is the purpose of raising funds? So if I say, let's say capex. So for capex, what is it that I need monies for? I'm looking at certain plant and equipment. So all the supporting documents like the quotations from vendors and valid quotations. The validity have to be over 6 months from the date of filing of the document. Then if it's for working capital, then all the parameters and the estimation of the working capital. So all those objects have to be detailed in the object section. Then you have the history section, when all the milestones, whatever has happened, if there are changes in the objects in the past, you have to mention. If there are any shareholders agreement, you have to mention those over there. Details about your group companies, details about your promoters, details about all your directors, and more importantly, you have to ensure that there are no non-compliances, no the directors or the management are not barred, or there are no offenses that restrict them from accessing the capital market. So these are the mota moti, the few chapters or the few sections that get covered in the offer document, and that creates the the more efficient, the more transparent the disclosures are in the offer document. That sets the tone, and that's the foundation of trust between you and the shareholders. So merchant bankers, exchange, play a role that you cover everything in the offer document, but the better the disclosures, please be aware that the better the disclosures, the better the valuation you could get, the better the relation you will have with the shareholders, and it will bring in good reputation for the company as well going forward.
Okay, thank you, Ridhit sir. Before we move on, I just want all the attendees to drop a questions basis if you have any, so we can discuss on those questions at the end of the webinar. Yeah.
Parth sir, my question to you is that how SME IPO is beneficial for the MSME promoters?
Okay. So, you mean to say what are the benefits of
Yes.
to SMEs? So, first of all, is a long-term equity capital. So, right now, first of all, they don't have to pay any interest on this capital. They have to give return to shareholders. When there is a change in capital structuring. So earlier, the companies that we approach or we speak are only relying on debt as a primary source of finance. Now, if you get an equity or debt equity ratio is going to get improved, and probably you can further increase your working capital limits once you go to the bank. They can probably use it for expansion, for their modernization or any capex they need to do. The biggest benefit that I see for an MSME entrepreneur to get listed is value unlocking, value creation that we call. So here, company may be doing a crore of profit, but through valuation change, they will have a market cap of, let's say, 10 to 15 crores, depending upon the sector. So this value unlocking will happen. If you remain unlisted, uh, your net worth is there on the books, but that will never get converted into value for the shareholders and yourself. And like if you speak about any of the bigger companies in the world, majority of them are listed and they have created value for all the shareholders. Uh, Another important thing is liquidity. So now shares are unlisted, they're lying in lockers, they don't create any, they don't have any value. But once they are listed, they will have a far better liquidity and an exit for any shareholders. Better credibility and visibility. So once what we see is the companies get listed, a lot of people start approaching them. They get a lot of avenues. They get a lot of better businesses. Their credit ratings improve. So this is a better chance to probably showcase if you're running a great enterprise. Corporate governance get improved. So, say it or not, once there are independent directors on the board, and if they question for on behalf of the investors, you'll have to answer. So you're meeting a better corporate governance norm, and like you're opening a lot of doors for a future fundraising. So right now, what do we see is, example, the company is doing 10, 15, 20 crores of turnover. They reach to 50, 60. They know how to reach to 500, but they don't have a plan for fundraise. So you question to any SME entrepreneur, and they will tell you the same thing. We know our business. We know everything well. We don't have a plan for fund. Well, we don't know how to raise funds. Uh, they know right now only bank is the only credible source to raise funds. But after a point, your collaterals are going to get finished, and you won't be able to raise much more funds. So this equity could be a leverage and could be a source for future fundraise. Obviously, ESOPs could be one of the things. So, like how when they're competing against the institutions best in the country, uh, they will have to do something that bigger institutions may not be doing. So, to motivate them, they have to give them ESOPs, talent, and other options to ensure that they stay in the company, and succession planning. So basically, a lot of businesses that what we have seen is without a proper succession plan, they fall. The only reason being that they never have thought that this enterprise can run forever. Even if they go as a promoter, probably they can pitch in a professional management and they can run the company. So that should be the goal for any entrepreneur who is getting listed, that their company should run forever. It should not be dependent on the promoter for day-to-day functioning. Yes, when the promoters reaches the age, professional management should kick in, and promoter can sit back and see how things are run. So these are some of the benefits that I probably see for any SME to get listed.
Sir, one more question for you is that you have been in this industry for more than 20 years now, and the SME IPOs are getting more and more attention in last 10 years. So may I know what are the factors that are gaining the attention of MSME to raise the funds via SME IPO?
So basically, it's if you go back and see the history of the evolution of SME capital markets across the world, earlier years it takes a little time for everybody to understand that what is this system credible? Is this system right? Whether it will kick in. But once things have evolved, and I think Mr. Ridesh also told, that once 100 listings are done, people start understanding. So I think 2012 till 15, I think 2015 first 100 listings got happened, and now we are seeing 100 listings maybe in a quarter. So I think this is how things change once it catches momentum. Uh, there is a formulation of entire ecosystem. So earlier there were limited bankers, there were limited AIs to invest, and there were no entrepreneurs to list. So all three were not present. Right now, all three are present. So first of all, basically access to growth capital. Now I have an aspiration to grow, and if I need growth capital, this is the platform. Simplified process. So now there is no assets that I have to wait for like a year or more. I think listing is very simplified thanks to the entire BSC team for ensuring that listing happens in a smooth way. As I told earlier, investor appetite, the ecosystem getting formulated. Now, once you're listed, you're listed. Doesn't matter you're listed on SME or main board. It creates a brand for yourself. And so what happens is a lot of entrepreneurs have created. So earlier, the entrepreneurs who listed, they created a lot of wealth. Looking at them, the people who were growing, they planned that why not create wealth? So value creation started happening. And if you look together, there are more than 1,200 SMEs that are listed, and I think the market capitalization is more than 2 lakh crore put together. So I think that's a huge thing for the SME ecosystem. Another important thing is main board migration. So earlier, also there was a main board migration that was there, but now companies have started migrating to main board in a 3 years time. So these are and market trends. So market trends have been quite positive, and SME, we all know it's a cyclical thing. It goes through different cycles. So favorable market trend is, I think, one of the things that has got momentum, and like compared to private equity, I would say this is a better option because private equity invest in, I think, one out of 100 transactions. So, but here if the entrepreneur has a growth appetite, there are a lot of investors to invest in. So this is even brick and mortar companies can list themselves, and we have seen a lot of examples. Yeah, it's just that you should keep doing what you're good at. That's the only thing. And if you're doing it with perseverance, I think investors really appreciate that. So I think these are some of the factors that I think has helped SME in last 10 years.
Okay, and so earlier, as we discussed, that the most of the MSME businesses are, family driven or promoter driven businesses. And as you said yeah, in your discussion as well, that when company is planning for any SME IPO, it's not like one person company or something. All the middle management also play the important role. So may I know what is the promoter mindset, and what is the importance of a promoter mindset, and what should be the promoter mindset for preparing for an SME IPO?
So I think promoter mindset is of utmost importance, and I would really say that uh, see, any investor who is investing into a company, any big investors would like to meet the promoter, and if promoter is very crystal clear about his growth, this is what it will make a little difference. Means like promoters, what so question some of the questions that we always ask the promoter: why you are getting listed? And 9 out of 10, then they will tell for funds. And funds is not the right answer. Yes, it's a byproduct. You will get the funds. But so only 1 out of 10 entrepreneurs will say कि we are entering because we are listing because we are entering into a growth phase, and I want to grow, showcase my growth better to a lot of investors in the ecosystem. That's why I'm getting listed. So these are the entrepreneurs that makes a change. So I would just give you an example. We listed a company some time back, and it was a very simple business, very simple, commoditized business. And like in your last slide, you said that why private equity don't invest in. So none of the private equity or any of the investor would have invested into it because it's a very simple business. He did a very simple thing. He told that whatever I'm going to do in a monthly basis, I'm going to update to the stock exchange. And he kept on doing that. And the profitability, the turnover started rising, jumping. So over a period of time, he created the valuation jumped to 6 to 7x in a span of a year because his profitability also jumped. And he did another fundraise. So now, if the company was unlisted, he would have been there itself. But eventually, what he understood is simple thing. Though it's not a fancy business, it's not a business that everybody will go crazy about. But simple things. Like he did simple things, and I see the output is was fantastic. Some of the I'll tell you why promoters' mindset matters so much. See, if you have the right promoter, he will ensure that entire leadership team is being built like that. Entire team is if the team has been built like that, the institution, the thought process of getting into an institutional mind will be in place. And he will value his long-term vision. See, a lot of promoters, I will tell you very frankly, they go in a hyperloop of that we want valuation, we want this multiple, we want that multiple. And after listing, they realize that no, this is not the right thing because of the promoter's mindset, because they think that no, this is what the valuation is. No, let market decide your valuation. I think as a promoter, if I ever want to get listed, I will always say whatever market decides is the best thing for me. I don't want to go too heavy or too slow. So this is the thought. Second is transition from a 1% company, as I told you, to a professionally managed company. Means like he should not be taking day-to-day calls. He should be only included in strategic calls. He should only think about that how will I grow my company to 10x. Whatever I have to do, I'll do. Communicate. And communicate to investors, speak, go for a roadshow, uh, uh, see what other people in the entire ecosystem are doing, मतलब what companies what mainboard companies are doing. And it's very simple. So from a owner mindset to a public limited company mindset. So these are the simple things, but that makes a lot of difference. And again, I will repeat, the company has to think for a long term. It's not a short journey कि आज list हो गए and that's it. No, this is not the end. This is the start of your journey. And if people start believing that this is just the start, I want to stay put for next 100 years, they will valuation will never matter. It will never matter to them that what I'm going to do next. What will matter is whether I'm growing or not, whether I'm outbeating the entire industry or not. So, example, the industry is growing at 10%, whether I'm growing at 25 or not. That's it. That's the simple question that they have to ask yourself. So, if these mindsets are there, it will go. And they have to understand one thing, that sometimes it is too good to be true. Sometimes it is like if somebody comes and tell you that yeah, that 25 multiple or 30 p multiple is also possible, it's too good to be true. You have to ask yourself that no, this is insane. I will list at a fair valuation and I'll give return to shareholders. That's my objective. That's it. Rest all will fall in place. I think that's the reality, and that's the importance of promoter mindset.
Okay. So, Parth sir, one more thing we have seen in the market that many promoters play like take the IPO as the exit opportunity. Many investors take the exit opportunity, consider IPO as an exit opportunity. So, is there any requirement with respect to the minimum promoter contribution, lock-in requirement, so that which can build the trust of the investors in the company?
So I think this is as per the ICDR, 20% has to be logged in for a period of 3 years, and another the rest of the holding, 50% will be logged in for a period of 2 years, and the another 1 year there will be locking of another 50%. So this is the minimum promoter lock-in that is required for any person to go public. So in case they are not meeting this promoter contribution, they have to bring uh, the differential contribution at the IPO price. So, for example, you only have a 15% promoter contribution, and the 5% you have to bring at the time of opening the IPO at the IPO price to ensure that lock-in requirement is met. And this is very good. And I think the change that they have brought in will again strengthen the entire ecosystem, where promoters lock-in will be increased. So it's just this. I would say it's a very welcome step.
Okay. And so, Parth sir, may I know that how merchant bankers arrive at the valuation of the company while preparing for an IPO?
So Mo- this is a very typical. So I was telling last time also, P multiple. This is the only thing that is being done in the entire industry. What the question that they're going to ask any investor is going to, what is the P multiple? That's it. It's point blank question. Don't ask. Means like what? How is? I'll just simplify it. So example, your profit after tax is 10 crores, right? 10p means post issue market cap of the company will be 100 crores. So 10 crores PAT multiplied by 10p multiple 100 crores of post issue market cap. Now, this multiple ranges between, let's say, 8 to 15 times, or maybe as high as 20 to 25 times, depending upon the sector, depending upon the state of growth, depending upon your cap table, and many different things. This is a this really depends. So, right valuation basically when I'll tell you what is the right valuation when it pinches the promoter to dilute. So, example, if it's 100 crore market cap as we was talking about in last year, if it pinches the promoter at 100 crores now, then it is right valuation to dilute, because if the promoters think that कि नहीं ठीक है 150 is okay, no 150 is not okay, he should cry out कि this is the, then it will make wealth for investors. And once you start making wealth for the investors ना, means आपने मतलब you have, if you have given gains to investors in short term, it goes a long way. Everybody will always think that yes, this company is fair, true and fair. There are a lot of market considerations. There is a concept of shadow demand. So basically, we usually do a shadow process whereby we check it with multiple investors that how do they look at this sector, what is the P that they are comfortable in. So once we get the sense, then probably we'll come to the right valuation. So and balancing process is very difficult. Means like promoters will want for 20, 30, 40. Investors will want to give a 10, 15. So as a merchant banker, it's a tough role to ensure that everybody gets the right balance, and ensuring the regulatory considerations are being met with. As a merchant maker, I always think, and I want to convey to all the entrepreneurs that don't think about valuations much. Think about entering the capital market. Valuations are going to follow. If you think that if I want this valuation at the start of the process itself, it's not going to go a long way. But if you think that I'm here to create value, doesn't matter. I'm diluting just 25%, right, at the start of the IPO. If my valuation is right, it will create wealth for the my 75% and eventually for entire shareholder kitty. But if my valuation is wrong at the start, I won't be able to raise funds again. So as a role, merchant banker it's very critical that as a merchant banker I have to tell them sometimes that no, this is not the right valuation. This is not going to do justice to any of the investors. And eventually, some entrepreneurs understand, and they will thank you later on once your company is listed. Yes, you are right, but some people don't. So, as an entrepreneur, they have to understand that look at why an merchant banker will tell you to list at the right valuation, because it is for your own benefit, for the long term vision of the company. Doesn't matter some couple of crores you get less or more in short term, but if your capitalization gets created in long run, it's I think it's a pretty much fair ask. So I think this is how we arrive at a valuation to this front. I can go on and on for hours for this question, but I think in the absence of time, so I think we can move on to next.
Yeah, so one more thing. So, for example, say for my company is in a e-commerce business or a food processing business, and there are certain other companies which are in the similar line of business. So, does the valuation of those listed companies, help us to arrive at the valuation of our company as well, like
Like,
peer
but
comparison?
yeah, peer comparison helps, but example, your peer is listed at 10, you should list at 7 or like 6 maybe. Because that's a listed entity. If I want to buy that company and it's already available at 10, why would I invest in your business?
Yeah.
So you have to come at a reasonable valuation for investors to make sense. Now, some businesses are unique, they cannot be valued, but you have to ensure that it looks attractive. Means like example, you have to set up the right peer first, right? So a lot of people they come to us and say that like main board company is trading at 40 multiple. I think we should also get this 40 multiple, and this is the screener. You probably go and do your research, and then probably we can take this out. So now I'll tell you, first of all, scales matter. You are doing 100 crore turnover. The main board company is doing 5,000 crore turnover. So first, scale is different. Second, you rationally we have to look at the P multiple of like example Sensex. So what is the P multiple of Sensex is trading? Let's say between 24 to 27 right now. You should the best companies in across India is trading at that multiple, and we have to come at a multiple that is probably 50% or 60% less than that. Then only it will make sense. So we have to analyze the peer, then probably leverage depending upon the growth rate, profitability, and corporate governance, gauge the sentiment, and come with a reasonable expectation. So I'll just wrap this up in one way that example you just found out that like I'm doing 100 crore, he's also doing 100 crore. Now he's already listed, he's trading at let's say 15. You should come at 10. Please do not expect that you should also come at 15. You should come at 10 only. Then only it makes sense from investors to move out of that company and jump into your company. Why would otherwise they and his listing history, he has already created wealth. He has already done justice to a lot of investors. We have to start with that. So checking up here is most important, and revenue matching. So now you cannot compare X to Y just by multiple. You have to check the growth rate, you have to check the profitability, and you have to check that whether this will fit into my shoes or not. So I think that this is more or less how these peers have been selected.
Okay, thank you, Parth sir. So, Dhiren sir, the question for you, you being an investor, what you expect from the SME companies while you invest in the SME IPO?
Thank you, Bhavesh. I think my most of this is being answered by Parth, but still, as an investor, uh, attractive valuation matters a lot. And he rightly said that if you compare with your peer, but those peers have proved themselves in the long run.
Yes.
And a new company is a new company. They need to prove themselves. So if the valuations are attractive, all the investors would want to invest and stay with the company. Secondly, an investor would also want to invest only in the growth capital, mostly in the growth capital. and to see the company growing. If the business model is scalable with profitability and good cash flows, I think the investor is game for it. Uh, to add to it, a good corporate governance, transparency with the investors, and the promoter skin also has to be in the game. And once a company comes in and raise funds, I think the object of the issue should be met, which was earlier mentioned in the DRHP. So these all things matter a lot for an investor. The growth capital, the sectors which are really now growing, and the size of the IP also matters. Subscription, comfort, everything matters a lot. But most importantly is scalable business model, growth, and attractive valuations. This would attract an investor into investing in any of the company.
Okay, thank you, sir. So one more question for you is what are the benefits versus risks you see while investing in SME IPO?
Uh, a good question. Risk is post listing, you will see a lack of liquidity in the SME IPOs. So if you are investing for a longer term, I think you will be able to mitigate this risk. And the positive is that you are entering at a very early stage of growth. So that gives you a valuation comfort. If the valuations are placed right, the valuation comfort is always there because you are entering at a very niche initial stage. By the time the company gets a proper valuation, you've already made money on that investment. And secondly, the exit option is you have to think about it because of the low liquidity. If you want to exit that particular company for any of the reason, there is not much liquidity on the exchanges. So you may get stuck in the investment. Lack of transparency could be one more factor as far as the risk is concerned. Scalability challenges are there. But at the same time, if the promoter is strong and if he has a visibility to grow the company, I think then you are in the right place at the right time. So I think these are the most major differences as far as the main board and SMEs are concerned.
Okay, and
Okay.
what are the factors that one should consider while investing in the SME IPO?
Factors. The first and foremost is the promoter because an investor is always betting on the person, on the promoter. So his background has to be clean. And for that, I think BSE and the merchant bankers do a great job. Second is that the money should not be siphoned off after the IPO. So the proceeds of this IPO should be utilized the way it has been described in the object of the issue. Then financial performance, corporate governance, the sector has to be good, and the valuation metrics should be met. Actually, so you investing, the risk factor is always there, but most of the risk you want to mitigate. And I think in that case, the exchange and the merchant bankers do a great job. It makes us easy for evaluate a company.
Okay. One more thing that there are nowadays, there are a lot of investment opportunities are there. Even you being an investor, you can invest in the main board IPO as well. So, what are the attraction for you to invest in SME IPO as compared to the main board IPO?
Hmm. See, if you see the history of our stock market, there are too many companies which were small before 25 years, but now they have become large caps. So the same opportunity you see here in SME IPOs. If the business model is scalable, then you enter in the company at a very right valuation. And if you stay with the company which has those growth prospects, you make a good investment. It becomes a good investment. So this is the major difference. Secondly, valuations, you get it at the cheaper valuations when they come in for an SME IPO, comparing it to the main board IPO. I think HNIs and retailers would always want to allocate their funds here. Similarly, there is no much premium in the listing. So you also have an opportunity to invest once it gets listed. And portfolio gets diversified. Sorry, a portfolio gets diversified as far as your mid cap and large cap companies are there. So you invest some of your portion in SME and hope for a good ride on that investment.
Okay. For example, nowadays, many MSME companies are coming up with an SME IPO. Would you like to give any advice to the promoters of MSMEs who are preparing for an IPO?
I think that portion also Parth has covered in a very nice and nice way. But transparency, promoter skin in the game, promoter has to be honest to his business. Rest everything will follow. If he is honest to his business, if he wants to continue as a entrepreneur, work hard and make a value, create a value, he will is not only creating value for investors, 75% he holds, so he's creating a great value for himself.
Okay.
So if the promoters focus on their business, I think that is the most one thing which every investor would want to be there.
All right.
Thank you, Dhiren sir. My
Thank
next
you.
question is to Bhavish sir. What are the common rounds for rejection of DRHP?
So, as rightly said by the Riddhesh sir and Parth sir, that DRHP plays very important role, and it is a foundation of a trust for any company who is planning for an SME IPO. It contains the history of a company from incorporation till the stage of listing, that what all achievements are there, what are the risk factor, how is the share capital of the company is built up, all these things that cover that are the cover that is covered in the DRHP. And there are a lot of other disclosures as well. It also covers the promoters and directors background, the business of the company, etc. So DRHP plays very important role while preparing for an IPO. The common grounds, if you ask me, for rejection of a DRHP, so this could be like, say for example, if there is any risk factor which you do not disclose, like improper disclosure is given in the DRHP, the risk factors are not properly covered. Then for another thing could be if your capital structure is not proper, or there are issues with respect to the capital structure, like the share capital is built up by round tripping or circulation of funds or something like that. Then another important topic with respect to the DRHP is object of the issue, that the funds which I am going to raise through IPO, where I will be using, what is my object, and the any other supporting documents or proof supporting certificates that also should be in place. So all these things play very important role. If that is not mentioned properly, then your DRHP is liable to be rejected. Apart from that, for financial performance, if any company's financial performance has grown significantly in say last 3 to 5 years, so that could be also one of the reason for a rejection of a DRHP. Apart from that, any litigations are pending against the company or against the promoters, director, which may impact the company or its valuation in future. So that also could be one of the reason for rejection of a DRHP. So these are the major reason that DRHP can get rejected.
Yeah, thank you, Bhavish sir.
So, so we can, means I can provide you with the certain case studies as well, where the SEBI or the stock exchanges has rejected the DRHPs. Like there was one company which was open for subscription in September 2024, and the offer period was open, the IPO got subscribed for more than 325 times. However, the SEBI has cancelled that SME IPO. Reason for the SME IPO cancellation was that they were having a transaction with the shell entities. Means there was a circulation of a funds or something like that, and because of which SEBI asked them to cancel the IPO and refund the funds of the investors. Then apart from that, there was one another company which had planned for an IPO, mega IPO of say more than 200 crores rupees. And it was a, if that IPO would have been successful, that would have been the one of the largest IPO in SME history. But the SEBI rejected again that IPO, reason being that SEBI has received several whistleblower complaints against the management and the promoters of the company. And thereafter, SEBI asked the promoters of the company to withdraw or postpone the IPO. Apart from that, one more company was there which came up with an IPO. The shares got listed, but later on the SEBI debarred the promoters and the merchant bankers with respect to that company for the purpose of improper utilization of funds. Means funds raised through an IPO were not actually used for the purpose which was stated in the offer documents. So these are the key case studies you can refer to where the IPO got rejected. We can move to next.
Yeah. So, Bhavesh sir, thank you for providing us the case studies with respect to rejection of IPOs. So, just wanted to understand what are the success factors for SME IPOs?
So this answer, I think most of this answer is already given by the Dhiren sir as well as Parth sir, that any SME IPO gets successful when there is a good amount of growth story is there is a good financial performance, clear use of funds is there, then if issue size is small or the attractive valuation is there, then the sector of the company in which it is operating, that also plays very important role. Apart from that, the role of BSE as well as SEBI, or means role of stock exchange as well as SEBI plays a very important role with respect to the regulations, any amendments, etc. Then investor sentiment, like for example, when the company is planning for an IPO, at that point of time, the market sentiment also should be good. So that these are the very key role factors that play very good role in success of an SME IPO.
Okay, so the next question is also aligned with this question. What are the key points that has to be kept in mind at MSME promoters while preparing for SME IPOs?
Means they have to evaluate their business readiness for the SME IPO. They have to evaluate their business, whether it is on the growth stage or they are entering into growth stage, then that should be the right time. Then they have to also keep in mind the corporate governance requirement. Then they have to keep in mind the shareholding structure. They have to strengthen their corporate governance. They have to be ready for the financial preparation and all. Then they have to have a defined roadmap for the use of the funds that they are going to raise through an SME IPO. Then their own mindset is also very important while raising the funds. Apart from that, as Parthan rightly mentioned earlier, that middle management or the support system plays very important role, like team of professionals, their internal team play very good role. Apart from that, your relation with the regulators, your relation with the investors play very good role. So these are the points that have to be kept in mind while preparing for an SME IPO.
Okay, thank you, Bhavesh sir. So we have came to our end for this session. So
There
before
are
closing,
Harsh, there are a couple of questions for
yeah, we will.
Ridesh sir. Ridesh sir, we have seen that recently BSC has come up with an AI powered DRHP process system. So I would like to know that few of the highlights of this system.
So AI is a tool which is given to the merchant bankers. Basically, it's a pre-check self-validation tool wherein any offer document that is being filed with the draft, I would say the draft offer document that is getting filed with BSE, the merchant bankers can run it through the AI, and they can check if there are any errors, discrepancies, or any non-compliances, because the AI will flag out. If there are any discrepancies, it will flag out. If there are non-compliances, it will flag out. So there are a lot of those leading flaggings that happen, with which the merchant bankers can rectify, and that they can file the revised, or they can finally officially file the updated or the revised offer document with BSE. Now, the outcome of this is that we have seen it has helped the merchant bankers as well as the compliance team at our end to process the documents faster. So this is a direct the most front coming impact that AI has created.
And one more thing, what are the steps or BSE is taking, to promote the SME IPO, to promote the SME platform? That I would like to understand that the
Thank
initiative
you.
taken by the stock exchange.
Yeah, thank you very much. So this was important for us because we have been, as an exchange, we have been going out. It's been, as I said, it's been 13 years. We have taken of steps, but they've all been baby steps. Now we are trying to move. So AI, getting tech in the whole process, reaching out to merchant bankers, working along with merchant bankers. So we though we call ourselves as first line regulators, but we are partners with merchant bankers. We work along with companies. We are reaching out to companies, and spreading a lot of financial awareness, because there's a problem of financial literacy amongst the companies. So if you go to tier 2, tier 3 centers, more so tier 3 centers, the tier 3 centers, we hear from companies saying that, we are not aware about or the way in which we need to go for an IPO. We don't have the wherewithal, the expertise. Even the professionals out there in those centers, they don't have the wherewithal or the skill set to prepare the companies in those regions or those areas to take them public. So we as an exchange are going out to those areas, and then we are motivating the companies to reach out to merchant bankers and professionals alike, so that they can come and get listed. So we are working with all stakeholders involved, right from companies, merchant bankers, to professional bodies like ICA, ICSI, to say industry associations, to investors. We are working along with everyone, so that we ensure that more and more companies can get are aware about getting listed and the alternative route of raising funds through the capital market, and they can grow faster. So that's what we have been doing of late, and we will continue to do this.
Thank you, Ridesh sir. Thank you very much.
Thank you.
So we have almost answered most of the questions received from the participants as well. And so there are no other questions, so we can proceed for the conclusion of the seminar.
Yeah, thank you. Yeah, so that brings us to the end of the today's insightful discussion on SME IPO. It was an amazing session. A big thank you to all our expert panelists and to everyone who joined us today. We hope today through the session, all of you have got fruitful insight from our expert panelists. Please note that the decision we are having today is a general discussion and it may not be applicable to any particular matters. And we strongly advise you to take professional advice. Until next time, take care, stay connected, and keep following the LinkedIn page for more such valuable session. In case of any questions or queries, please write to us at contact@affluence.net.in. Thank you again and goodbye for now.